but nowadays they want the banks in charge of the money.
Mm-hmm.
But yeah, if you allow the banks to take complete charge of the currency or the money, then we are all slaves.
All right, we are back for the Friday edition of the Mike and Mario show, and it's been a while, but here we are, to say the least. So, Mario, how are you doing, my friend?
Yeah, I'm doing well, and it's good to be back on the Mike and Mario show. Our schedules conflicted the last few weeks, and to the viewers out there, we haven't stopped doing the Mike and Mario show. It was just a conflict of schedule.
Yeah, definitely. And so, wow. So let's do a quick recap. And so I think last time we spoke, we were talking about the anticipated quarter point hike from the Fed. We got it as anticipated. They said they're going to do one more, and then they'll reassess. Jerome Powell talking about the hot labor market. What else is happening out here? We had President Biden came out and said the economy is stronger than ever. What else? Let me see here. There's so much stuff that's happening over the last couple of weeks, but here we are, let's say the least. Gold and silver still cruising steadily along, and more people are waking up to the truth of how important it is to be diversified. And in the UK, I'm hearing a variety of stories as well, so I want to get your thoughts. What's some of the most pressing circumstances or issues in the UK as of now?
Well, economically, we're having a lot of strikes. People in the public sector and other parts of the economy continue to strike. And why is that? Well, because the Bank of England and the government have totally debased the currency, and people's incomes don't cover their cost of living. And even though we have the Bank of England blaming people, asking for higher wages for it. They're saying you're to blame for inflation. Yesterday, the governor of the Bank of England, he testified in Parliament and said that the public sector workers should not ask for too much of a raise because, according to him, CPI is going to go down by the end of the year, and it's going to be below 2% next year. I think the guy is. I think he thinks we are as stupid as he is, because that's how I see Andrew Bailey. What else is pressing? Well, I detect something, some trouble for the establishment of the UK, because this week the establishment welcomed the president of the Ukraine and received him like a hero. So that's been the big distraction this week, Zelensky in the UK. But I detect a lot of anger from the general public. Maybe only the people that I follow on Twitter or that follow me. But I think people are saying, "What about us in the UK? Why aren't you looking after us?" Like today, for example, I went out because I wanted to go to my local coin shop, and I did. And I stopped at the petrol station, or gas stations, like Americans call it. And I filled the tank, went in to pay, and came out. And there was a guy taking donations for veterans. And I stopped and I gave a bit of money, and he gave me this blue bracelet for the veterans, which is nice. And we started talking, and the subject came up. We help other countries, but we don't help our own people. And so that's what's going on. And today we had the GDP number for the fourth quarter. It was 0, but the third quarter was negative. So they just avoided a recession. But I spoke today in my video this morning that the reason why the GDP wasn't negative was because of deficit spending, because deficit spending is included in the GDP. And guess what? Where that deficit went in the UK, it went to pay for capping our utility bills. So that's the only reason why the economy on paper looks good, but I don't think it's as good as people are saying at all. I saw a lot of shops boarded up. In this place I went in the shopping center, shops closing down.
Yeah, and so same thing here. Like, just the news continues to pile on. It's negative. It's negative. It's bad news in general. Numbers itself, they're padding the stats. Like literally, our jobs numbers from a couple, was it last week or so, was just so unexpected. Like it's been unexpected numbers. At the same time, all the key indicators, the inverted yield curve, and you name it. Bond yields, of course, it started to spike again, and all this crazy stuff is out here. But yeah, they selling the economy is stronger, but nobody's believing it. But one of the things I want to touch on, if I can get this article up, which I think more and more people now, even a lot of commentators, are talking about the whole central bank digital currency. And of course, all the projects are fully operational as far as them doing the preliminary investigation type of testing. And so what was surprising to me was the Bank of England, how they came out and pretty much threw out the ballpark figure of capping deposits for individuals at £20,000. So I'm thinking, like, does that include everybody across the board, or is that just the average Joe and Jane? And so if I could pull up this article, just the headline as of now. Let me see, Jeff, I can show it on the screen.
I think it came out a couple of days ago, the white paper. And someone told me about that because I haven't read the white paper yet. I think it's £20,000 per every individual. It doesn't talk about companies, corporations, and other like institutions.
Right.
And then the Bank of England, the day they released this white paper, they came out the next day and said, we're going to keep cash. It's not going to go away. We're going to have cash in the future. So I'm not too sure what's going on here.
Right. And one of the things that caught me by surprise is that, I think the UK, based upon all the events that's taken place over the last, couple of months or so, especially with the possible, pension meltdown, and of course, the bond yield situation, you guys are experiencing there. The economy slowing down. So they are literally pushing the pedal to the metal, literally, to try to get this thing out here, even though they're talking about 2025. And so even with other countries, the narrative is that by 2025, they want to have these things up and operational, because obviously between now and then, they know that things are really going to change, or that, that event that we're anticipating is going to occur. So I wish I can dive deeper into this, but it won't let me. But here's just another little headline referring to or talking about the Bitcoin, as it was labeled. It says Bitcoin will lead to a significant infringement on our civil liberties. And so I wonder if people will actually pay attention and listen to this and give their feedback, as if it even matters.
Well, yeah, I think there is a little bit of opposition here, even in the mainstream media. And I don't know if you saw this week as well, in Switzerland, they got enough signatures, I think 110,000 signatures, to have a referendum on whether Switzerland should also keep banknotes running, or cash, alongside a possible digital currency. Even though the Swiss National Bank, I'm not sure they're planning on bringing a digital currency, but yeah, they're really pushing this. And I think even if they say, oh, it's going to run parallel with cash, I think it's a bad thing, because eventually they're going to phase out cash. I mean, even today, when I gave some money for this veterans thing, the guy had like a little, electronic pay thing. So it was like I just used my card and paid. It's really convenient. But the central bank digital currency is different, because the government would have access to all your information, because people will say, oh, the central bank is independent, but it isn't. Central bank and the treasury are working together. And I don't want the government to know what I'm doing. And right now, the banks, I hope, still provide us with some privacy, because I think privacy is the most important thing in our Western culture.
Right. And also, a lot of people have obviously either never knew, or majority of the population at this current point never knew that money in of itself, especially when it's sound money, was actual property of the individual. The gold and silver coins that we took, or not we, but that they took to the mint to have it stamped and coined, 100 plus years ago, was actually their own physical property. And then they paid a little bit of seigniorage off of that to the mint for making it turn into rounds. But now
I've got some here today. I went to the coin shop. I got some quarters and dimes. So,
Right.
but yeah, like you said, the mint was just a service that the government provided to make sure that the coins of the realm or coins of the republic, in the case of the U.S., were like uniform, and that you trusted the government and the mint to mint proper coins, real gold and silver, and you could take a kilo or 10 ounces of silver to the mint, let's say in Philadelphia or wherever, as a private individual, and they would mint, let's say, quarters or half dollars, and they would keep 1% of that silver to pay for the cost, and that's. But nowadays, they want the banks in charge of the money. But yeah, if you allow the banks to take complete charge of the currency or the money, then we are all slaves.
Right. And that's what we've had ever since the central banks have came into the game and pretty much become the primary issuer of fiat currency. So, debt issue currency. So, but that's one of my points, was that people don't know that money was initially, it was your own individual property. And since then, we've swapped it out and traded it with, paper additives or derivatives of all types of other crap in between. But one thing I want to talk about, I think, that goes hand in hand with this push of CBDC, we can learn a lot from events happening elsewhere. And so, as I mentioned earlier, with Nigeria, so I tend to try to follow the variety of countries just to keep my eye on what's going on there, because we can learn, because all that stuff is going to be implemented first in those nations before it hits us here. And one of the primary concerns with Nigeria is that right now they are experiencing some extreme, let me put this on the screen here. They are going through major issues similar to what India experienced, back in 2016. I know you covered that as well. I talked about it a little bit myself back when it was taking place, as far as removing the higher denomination notes. And so what's different here with Nigeria is that they had up to a certain time frame to deposit all of their notes in general, because their central bank or their government said that they were going to issue new notes. But here's the problem now. They're having issues with those notes, supposedly. And so there's long queues for cash as well as fuel. And a lot of people are not too happy because there's not enough cash. Now, the counter to this is that last year, or I think it was early last year, the Naira, their digital currency, came out, and they were expecting everybody to use it. So how coincidental is it that there's a cash issue on top of the fact that they already have their digital payment system ready and operational, but no one's using it? So I look at it as a way that they're trying to deliberately remove currency forcefully by having people deposit it and not able to gain access to it. And the opposite of that, they're telling them that the Central Bank of Nigeria pushes for more adoption of e-payments. And this was a couple of weeks ago, as the deadline approaches for turning in cash. So this is a very interesting event to me, just because it's happening already in Nigeria. So ultimately saying that it's not an official bail-in, but if you're not able to get your cash when you say you want it, their excuse is not enough paper notes in circulation yet. So very interesting. What are your thoughts on that?
Well, I think it could be the Nigerian authorities and central bank trying to push people into using more of the e-Naira, whatever it's called. But it could also be incompetence. Maybe they were trying to bring in new banknotes, but they didn't work it out properly. I mean, the Swiss, for example, I think they had to turn in the old 1,000 franc bills last year or something. I'm not too sure. But they gave him like 3 years. What happened in India in 2016, that they didn't give people much notice. And I have a feeling maybe that's what's happening in Nigeria. But like you said, maybe, it's like a very crude way of pushing people into this digital e-Naira. I think if they try to do that here in the UK or in the US, people would be very angry. And I think maybe I'm not praising governments and central banks, but here in the West, they have they're better managed than these institutions in India and Nigeria. And that's nothing against the people there. It's just that their institutions of the state haven't been around as long, so they don't have as much practice.
Yeah, and also I think with the G20 or pretty much the developed nations, we already have a very strong payment system where most people use their card anyway and very little cash. In Nigeria and all those other countries, all they use is cash for the most part, or their mobile minutes on their phone, but cash is the predominant use of exchange there. So, I can see how they could force that the way they're doing, or way they might be doing it now, just because they got more resistance to go up against, because cash is the most used currency there. So, but I think it's something worth keeping an eye on, just because, once we can learn a lot from examples that take place in other countries. So,
yeah.
What else?
I have a question here from Carl Lake. Should we? I know it's a bit early, but
we can go back.
An interesting question here from Carl Lake about the U.S. debt clock. He's asking why the silver ratio is at 0. Well, if you bring the U.S. debt clock and you hover about over the dollar to silver ratio, now it tells you on the top that the calculation is the year over year increase in USM2 divided by the yearly world production of silver. So the M2, I mean, I did a calculation the other day. Since in the last almost year, it's gone down by 2.69%. So it's a negative number. So actually that ratio should be negative, and that's why they've zeroed it out on the debt clock. It's quite simple. It's there's nothing nefarious about it or anything. It's just that it says, on the US debt clock, and it has the asterisks there. It says the US M2 money supply is declining year over year. So that's why they've zeroed it, because you can't really, you have a negative number there actually.
Right, but how about they took the M3, if that still existed, the total?
Yeah, I don't know what M3 is doing, but I would say M3 is probably coming down too.
Yeah, so, and that's what they're saying, year over year, and literally this phenomenon of basically almost negative, money creation for the most part is happening within the last half a year. So, to have a year over year comparison is not necessarily something that gives a lot of.
That's what they use here for this equation. The dollar to silver ratio. They use the year to year M2.
Yeah,
it's not that they've changed it, but. I think that's a good question, because I wanted to talk about CPI, because next week we get CPI in the US on Tuesday. It's expected to drop from 6.3 to 5.9. But if you look at M2, I was looking at it the other day, as I said, and from February 2020, it went from $15.4 trillion to $21.8 trillion in March of last year. So we're up 41%, huge increase. And that's why we've had rising prices. And but since the end of 2021, the Fed has raised rates from 0 to basically around 4.6 now, the effective funds rate. But so CPI has only dropped from almost double digits to around 6-7%. But the M2 has only dropped 2.69%. So, if they really wanted to get inflation back to where it was before the pandemic, they would need to get that M2 back down to 15.5 trillion. I can't see that happening. If they do that, the whole thing will implode. And that's why I think CPI or rising prices, they're going to come back eventually. They might drift lower a little bit right now, and people will go, yay, no more inflation. But I think it will come back once the Fed stops raising rates, once they might even have to cut again and start doing QE again.
Yeah, I think we're experiencing the side effects of just what is probably labeled quantitative tightening. They're literally trying to tighten, as I mentioned, I call it strangle the economy, just to try to tame those numbers, those figures as best they can. And they're trying to make sure that there's no leakage from the overall system. If it is leakage, they're trying to plug it in to where it doesn't cause outright bursting of the global economy for the most part. And so, do you think this next quarter point hike that's supposed to come in March is going to actually occur, and I think one more in May or something like that, and then we'll see, or what?
Yeah, I think that's what they might do, probably.
That's what they told us, yeah.
Two. Yeah. It's not going to make much difference at all. And a lot of the drop in CPI is just a technical thing because the U.S. Administration has sold a lot of these petroleum reserves, and it's brought down energy prices.
Yeah.
But it's not a natural thing. I think consumer credit is very strong still. So yeah, inflation comes in waves. Back in the 60s, that's when mid 60s is when inflation started picking up with the Vietnam War and the Great Society spending of Lyndon Johnson. And it was only in the early 80s that it finally topped. And then we went into what's called not deflation, but disinflation, which is lower rises. And so it took like a decade and a half to get inflation back in the bottle, under control. So to think that we can get it back under control in like a year and a half after we had the biggest increase in the M2 in the history of the world is, I think, not very realistic. But these are the same people who said that inflation was going to be transitory, and they're wrong.
Yeah, and also, especially here in the U.S. right now, of course, the debt ceiling is back on the table, so we're going to see a lot of back and forth with that over the next however long they try to come up with some type of agreement to kick the can down the road. And so I wonder, between the debt ceiling issue as well as the tightening of the money supply, the concerns of labor. There's a tidal wave of tech layoffs happening throughout our country. And it's good to say layoffs happening in Europe as well, that I don't hear about much because I don't dive too deep. But, layoffs is happening everywhere just because corporations aren't as profitable. So therefore, they're trying to shore up and free up their load that they're carrying by firing people just for earnings sake. And so do you think that there's going to come like some type of an event? I think we're set up for some type of an event that will really get the can back rolling. And primarily Ukraine, Russia seems to be the primary focus point at this moment. But then also there's rumors out of White House. I mentioned yesterday on one of my little talk shows that the White House is talking about possibly doing some issues with China and their dollar holdings. And so can you think that could be another little instigation to try to get China involved to have an excuse to cut back on the monetary spigot?
Yes. And we saw that China announced again, the People's Bank of China, that they bought another 15 tons of gold in January. They announced in December and November last year. Usually they announce a one-off every 3-4 years, how much. But now they're starting to buy gold every month and announce it. And I think it's a message to the Americans, you threaten to freeze our reserves. We're going to keep buying gold. And I think that's what's happening there. And
another thing is just so everyone is tuning in to the alternative media. Your audience, my audience as well. We all know the importance of metal, but when we get these figures here of central banks buying in 2022 and how it's surpassed any of the recorded posted or information given that they share with the World Gold Council, rather. So this year, I'm assuming we're going to see more of that continue to trend upward as well, to where the central banks themselves are positioning themselves for the inevitable. It looks like. Would you say the same?
Yes, and not just maybe China, Russia, and the global South, but I saw the other day even Croatia bought some gold, and Croatia just joined the euro. And what's interesting about that chart, if you could bring it back, is that back in the early 2000s, central banks were still net sellers. And ever since 2010, 2011, they've been buying. And despite that, the dollar price of gold is still pretty much where it was in 2011. It just goes to show how much paper they're throwing at it and how much, I think, of a bargain gold is. It reminds me a little bit of when FDR announced gold confiscation in 33. I think only a quarter of the gold was handed in, but then in January of 2034, he raised the price from $20.67 an ounce to 35. So this seems to me that has been happening over a decade. There, all the central banks are, they don't have to confiscate; they just have to buy and discourage people from buying. And then when they're ready, they'll reset the price higher. It's been done over like a decade or more, but Roosevelt did it over 9 months because there was no the gold wasn't traded in the market; it was money. So maybe that's what it feels like to me. And I know it's frustrating, the price of gold in dollars, especially, but I think it's just another opportunity to keep loading up.
Right. I keep reminding people all the time, don't concentrate on the price in of itself, just because so much effort, I believe, is being put towards making sure that the price doesn't break out. Because if it breaks out, it just shows that is a primary outlet that people will run to for safety, because obviously the currency itself is going to go backward. But what keeps me hopeful, and I remind people, is all the distressed countries around the world, gold and silver and those currencies have already hit highs or surpassed previous highs. So just be patient.
Well, even here in the UK, I think back in 2011, the high was just above £1,000, and now we are at over 1,500. So it has paid off here in the UK, not as much maybe as in the US. So one day, when the dollar goes versus gold, and by that I mean when the dollar loses a lot of value versus gold, or i.e. gold goes up, then the whole dollar system, our current fiat currency system, it's finished. And I think that's why they throw so much paper at it, because having control of a monetary system is a very powerful thing. It gives you a lot of power. Losing control of it, you lose power.
Right. And that's the last thing they want to do before they're probably done with the whole CBDC, the stuff they're trying to put together with that. So, all right, we got want to get to some questions. What we got here? Let's want to open up the questions and see. Here's one. Okay, Chris, appreciate you, my friend. It says, let me make sure I can read this. It says, when gold shoots to new highs and then is eventually reset by lopping off a couple zeros, how will silver be affected by this? Thanks. It's a good question there. Any thoughts on that? Lopping off some zeros.
I think silver will shoot up as well, and it will probably outperform gold. I think the gold silver ratio should be a lot lower, at least 30, if not lower.
Now, after the reset, lopping off some zeros, for some reason I don't think like that's going to be something that that we're really going to experience, just because I'd imagine they would want to have a direct roll in to the digital realm, so that those double zeros doesn't become a problem. But then again, like, we're going to be pricing gold, I think, and other things other than USD eventually. So I don't know how it's going to play out, but anyway.
Low blood pressure has a question.
Said Mario, why do they all call BRICS Global South? Sounds like they want to smear it.
Well, I mean, I've heard a lot of people call it the Global South. I know that China and Russia are not in the Southern Hemisphere, but I think it's just a geographical thing. Maybe I mean, it's probably better than calling it the global emerging markets or global third world. So, because the BRICS is just Brazil, Russia, India, China, South Africa. Maybe BRIC expansion, BRIC expansion is a better word, but not many people know that term. I think Global South just means non-North America and Western Europe. That's and even Australia and New Zealand, even though they're in the Southern Hemisphere. I think Global South just means not part of the Anglo-American Western European block.
Yeah, yesterday I talked about an article where the Bank of Egypt or the parliament in Egypt approved Egypt to join the BRICS New Development Bank. And a part of them joining the New Development Bank, and the Prime Minister of Finance was saying that it gives them a chance to not rely solely upon dollars, which they're short of, but then it allows them to use their own currency amongst those other nations that's inside the development bank. So basically, they can just swap currency. So I think we're going to hear a lot more of the inclusion of Saudi Arabia, Egypt, and all those nations, Argentina, everybody who put in the application is going to be coming in soon.
Roger Rose has a quite interesting question there.
Roger Rose, Black Swan event going to be a hacking situation. Cyber, Polygon.
Yeah, that's they had that exercise, and Klaus Schwab said a year or more ago that the next thing would be a cyber pandemic, and we're hearing more about that, aren't we? I think even the COMEX, they had a problem with hacking for the COMEX gold and silver open interest data. This situation with this balloon, the Chinese balloon, they could say they use that to hack things, maybe. Anything's possible, and it's a good excuse because everything now a lot of it is done online, isn't it? And it's maybe a good excuse to freeze everyone's account and say, "Oh, I'm sorry," said the Russians and the Chinese have, hacked everything.
Yeah, it was Russia. So yeah, what else you got? Any more questions out there? You see anything?
Oh, there you go. What if Russia will refuse to sell the titanium for Boeing and Airbus? Wouldn't you
buy titanium now? Would you buy titanium now? Expecting the price to go up. If there's a shortage of it, and the price is going to spike.
I don't follow that market too much. I'm not sure. Is Russia still selling titanium to the West? I mean, they are. I think I think they're the biggest producers of the stuff.
It's good to say they're selling it to countries that are labeled as friendly. So
yeah, they probably sell it to India, and then India sells it to the West.
Jonah says, "Who's buying crypto?" So there's, it looks like, what's his name, Gary Gensler, is starting to press in a little bit on a lot of the exchanges and stuff like that here, and there's concerns of them trying to unwind the staking industry, and so yeah, we'll see. Because I'd assume sometime by this year we're gonna get more of a framework. It will not be friendly for the crypto community, of course.
I saw that Kraken paid a fine, and they stopped staking. Yeah. And
what else you got here? Any other questions?
Someone low blood pressure says, "I love banks. They give me free money for silver."
Yeah, he's a LBP loves to max out credit cards, and so that's his mantra: max your cards out, get silver, and like the banks is not their money anyway. So
well, what I did today, talking about credit, I tell people not to, to try to get out of debt, but I went to get a new phone and a part exchange my old phone, and I found out that I could pay for the whole thing right there, which I could, but then the guy said you can pay it over 24 months, and I divided the 24-month price by 24, and it came out to the same price as if I pay now. So I thought, yeah, that's a no-brainer because I'll be paying over 24 months, and I think the pound will be worth less then. So that debt will become worth less. But it was basically 0% finance. I'm not sure how they do that with the financing part of that. They probably put it into the price. But so it means that if you pay now everything, you're actually paying for the financing too. So it's probably better to do just a 0%.
Yeah, I did my wife's iPhone the same way, just because she wanted to upgrade. And it's like, okay,
Yeah,
so
mine is an iPhone too, and for me it's important because I record a lot of my videos with the iPhone, and they keep getting better, the camera, and so I didn't get much from my old one because it was cracked in the back.
Yeah. So Anik says Russia's selling 60% of titanium for Boeing now. 60%. Wow. Boeing just laid off 2,000 people, I think. So
yeah, here in the UK as well. It's not Uber Eats, but Deliveroo. Have you heard? Do you have that in the UK? Deliveroo
nope.
is like an Uber Eats in the UK, and they've let go quite a lot of people. So yeah, the other thing about the job situation, the pandemic and the lockdown has made things look a lot better than they are. And what do I mean by that? Well, prior to the pandemic, for example, the total employment in the U.S. was about 150 million people.
Yeah.
And then it dropped to like was 152, sorry, and then it dropped to like 130 million when they locked everyone down because people lost their jobs or they were under furlough and they were counted as not working. And then by the end of Trump's term, it had gone back up to 142. So Trump could have said, I added 12 million jobs since the pandemic. But at the same time, he lost 10 million jobs since before. And now Biden comes out and says, we've created the most jobs ever by, in the beginning of my administration, another 12 million, because now we're at 155. But if you take the 152 from February 2020 to 155 now, it means every month since before the pandemic, the U.S. economy has created about 75,000 jobs a month.
Yeah.
And I read an article from 2017, Wall Street Economist, was saying the U.S. economy needs about 145 million new jobs every month for the unemployment rate not to go up. So you kind of wonder, are things really that good?
145 million?
No, sorry, 1,000.
Okay. Okay.
Did I say million?
Yeah.
No, 5,000 a month
Yeah.
to keep the unemployment rate from going up. But as I said, since the beginning of 2020, U.S. economy has only created 72,000 a month, so less than half than what's needed. So how can the unemployment rate be the lowest in 53 years? And it just shows me that they're tinkering a lot with the statistics.
Yeah. And it says U.S. weekly jobless claims increase. Labor market remains tight.
It's not tight.
So yeah, they sell us that bag of goods, man.
Well,
here's
one more thing. I think the
ahead.
reason they keep saying that the labor market is tight because they want to blame the labor market for inflation, and we all know that that's bogus.
Right, 100%. All right, well, we're at the 37-minute mark, and we still have a full day ahead of us. So we streamed a little earlier just because of the schedules for the day, but wanted to definitely connect with everybody. Hope everyone is doing well. Definitely, if you haven't, hit that thumbs up button, show your love for the channel, and subscribe if Manico64. Of course, everybody knows Mario. And Rethinking a Dollar if you want to stay plugged in and just stay up to date on what's happening. So other than that, Mario, we got CPI figures out next week. And anything else that we should be on the lookout for beyond, more distractions and diversion tactics?
Oh, yeah. One other thing is they've the Japanese prime minister nominated the new head for the Japanese central bank. He's only taking over in April, but it was a surprise nomination. And I think, that might create a lot of volatility in the JGB market and the foreign exchange market. So we need to keep an eye on that as well. Aside from, we got CPI in the US on Tuesday. I think Wednesday we got CPI here in the UK and other countries in Europe. And I think in the US, I think you get PPI as well on Thursday. So it will be a interesting week.
Yeah, to say the least. But all right, my good people, be blessed, be safe, have a great weekend, get your weight up and everything in between, and just be grateful for what you do have and to just have the freedoms that we do have thus far. So, all right, everybody, be blessed, be safe. See you guys later. Peace.